Hello, folks. Welcome to Kudlow. I'm Larry Kudlow. In case you missed it, here's President Biden yesterday on the South Lawn of the White House as he's about to hop into his helicopter, and he's responding to a question. Please take a listen.
Mr. President, what is your message? What is your message to Leader McCarthy? To Speaker McCarthy, sorry, sir. What will be your message?
Show me your budget, I'll show you mine.
Show me a budget, and I'll show you mine. It's not a serious answer to the reporter's serious question. Mr. Biden continues to stonewall Kevin McCarthy by repeatedly stating he will not negotiate on the debt limit. Meanwhile, Kevin McCarthy is publicly saying he wants a good common sense sit down with the president in order to reach a compromise on spending and borrowing. Now, as you know, the two will meet tomorrow in the White House, and there's tremendous urgency to this meeting for the simple reason that the economy is steadily losing altitude and is heading for a recession. Now, a sensible budget deal might help restore confidence in at least the potential for a future non-inflationary economic rebound. So many indicators, however, are raising the red recession flag right now. The Treasury yield curve completely upside down, with short-term rates driven high by the Fed, way above long-term rates determined by the market. The index of leading indicators keeps plunging. So does the M2 money supply. With most of the COVID stimulus out of the way, the personal savings rate has fallen significantly. Consumer spending declined in November and December. Consumer confidence continues to slide. New number today, it was down. People live in a paycheck to paycheck. Now, this is something. Their money, actual expenses are rising faster than their incomes. This is not good. It's happening across the board. According to the Morning Consult poll, listen to this, 28% of Americans making less than $50,000 a year are spending more than they earn. 28%. That's a big number. Then you go up the income scale, between $50,000 and $100,000 a year, 14% spending more than they earn. And if you go above $100,000, almost 10%. It is not a good sign. Banks are increasing loan loss reserves. That's okay. Their capital position's in good shape. But, of course, with rising interest rates on credit card debt and mortgages, it's the prudent thing to do. Good for them. Now, unemployment remains low at 3.5%, which is great. But hours worked fell in November and December, and that is not a good sign. And in the recent GDP report, business equipment investing fell significantly, which is most unfortunate because that's a productivity driver. But output per hour productivity is falling even while people are working less. All that is not good. Housing in deep recession already, almost no end in sight. And the inflation story has improved with the Fed's favorite measure, the personal consumer deflator, slowing to 5% year to year, 4.4% excluding food and energy. That is good progress. However, it's still over twice the Fed's 2% target. Meanwhile, for typical American families, key prices continue to rise rapidly. For example, food at home, up nearly 12%. Away from home, over 8%. Now, most energy and certainly gasoline prices have come well off their peaks, but even at $3.50 at the pump on average nationwide, even that is well over $1 higher than it was back in 2021. Basically, inflation from overspending 2 years ago and last year has wrecked the economy. Biden-esque big government policies that were completely unnecessary, stuffing dollar bills into family bank accounts, that's point number one. Point number two, the Federal Reserve caught unaware with its pants down, and they monetized all the federal deficits and borrowing. Everybody was in denial. Then came 2 negative quarters in last year's first half. That was a big warning. Now, despite some temporary growth, all these indicators I just mentioned are unfortunately pointing south. Inflation is still too high. Interest rates have shot up. The Fed has pulled lots of cash out of the economy. But overregulation has fought a war with oil and gas and, frankly, all business. Housing's down, consumers down, business investment down. Declining corporate profits could be the next shoe to fall. Look, We've had a good early year stock market, and I always love to see rising stocks. But I never try to outguess the market. I'm a longtime believer in stocks for the long run. Buy the S&P index, use the cheapest way available. Do not try to outguess short-term wiggles, I beg you. The Federal Reserve is unfortunately going to stay tight for quite some time. The chance of recession, unfortunately, is well over 60%. That's for this year, I might add. These are all reasons, and here's my key point, to limit government, cut spending, lower taxes, minimize regulations in order to generate a big recovery. I want free enterprise prosperity, not big government stagnation. So, you know what's coming. Save America. Stop the spending.